Hello and welcome to the Business Standard Morning Show. I'm Kanishka Gupta. It's the 9th of October 2023 and here are the questions we will be answering today. Has work from home reached its end? Why are measures to control stubble burning failing? What are markets expecting from Q2 earnings? And what are personal guarantees? During the pandemic, several organizations embraced work from home solutions. It continues to be the popular choice among employees. But many argue that it is only the working hours that have increased. Productivity, on the other hand, dipped. As companies are trying to woo people back to the office, it has become hard for employees to let go of the newfound flexibility and work-life balance. Kasturi Akhil finds out if the work from home era is about to hit a dead end.
Of late, companies across various sectors have either revoked their work from home policies or are gradually transitioning employees back to office premises. Human resources executives told Business Standard last week that almost 80% of IT firms are likely to make a 5-day-a-week work from office policy mandatory by the end of the current financial year. While some of the large IT services firms like Tata Consultancy Services are encouraging employees to work from office 5 days a week, Wipro has explicitly asked employees to work from the office 3 days a week. Infosys has issued a warning of disciplinary action for employees in the US and Canada who are not complying with the return to office guidelines. HR firms in India are reportedly receiving in-office mandates from clients looking for employees in the manufacturing, BFSI and retail sector. They cite reasons like onboarding needs, security concerns and enhanced performance away from the distractions at home. This raises the question, has the work from home concept failed?
I don't think the work from home as a model has failed. It has definitely, I would say, the 3.0 of working. The 1.0 was fully in office. The 2.0 was essentially back to completely at home. I think there is a middle path which the industry is trying to find. And it is going to be a heterogeneous path. It is not going to be that everybody will be back fully in office like 5 days or everybody will be 0 days. And that is what we have been maintaining consistently, even when it was fully work from home, because the employee absorption, employee inculcation, training, and a lot of those, I would say the osmosis-based learning is not happening in a totally work from home.
As companies are pushing for employees to return to offices, office leasing in the top 9 Indian cities has increased by 33% to 15.8 million square feet in the July-September quarter compared to the same period last year, according to real estate consultant CBRE. Cities like Mumbai, Bangalore, and Hyderabad are at the forefront. Industry observers believe the work model may not be homogeneous across sectors and cities going forward.
A lot of essentially product and R&D industry, it will be a hybrid with little bit of more easy culture kind of a thing. In a lot of, I would say, services environment, it will be again hybrid, but more in office kind of environment. And within a company also, you will find a lot of heterogeneity. So I would not say that it is going to be a one shoe fits all kind of a thing. This will also have a lot of city-based connotation also. Pick up a city like Bangalore, which is so traffic-fested, and outer ring road where traffic is so bad. Companies may decide to keep it work from home kind of a thing.
While employers cite productivity and supervision as the reasons for rejecting remote work, they also aim to prevent widespread moonlighting that emerged as a common practice during the pandemic's work from home era. Corporate professionals sought additional income sources due to job uncertainty, driving them to take on multiple projects. Chief Executive of staffing firm Team Lee Services, Karthik Narayan, believes that a work from office model could curb moonlighting to a limited extent only, as those who wish to do it might find ways to work around the office hours and moonlight regardless. In a work from home setting, employees had more autonomy over their schedules and work environment, which for sure led to a better work-life balance. Going back to the old ways of work may lead to a shift in power dynamics from employees to their employers again. This may not sit well with many employees.
yes, there has been a paradigm shift in the last couple of years, and we are living in a candidate-driven market today. And there has been a shift in power dynamics in favor of employees. And to be honest, I think any organization which is not ready to accept and recognize this change will definitely be the one struggling to find, identify, attract, or retain the best employees. As employers begin to welcome staff back to the offices, I think they should be focused towards flexible work environment, which definitely can have the a balanced approach towards retaining the employees, ensuring that they are motivated and engaged towards bringing value to the organization.
Experts argue that while working from home remains suitable for certain roles, it may not be the preferred option for others. Therefore, assuming that remote work will never return might be incorrect. Instead, a hybrid model could become more prevalent, customized to meet specific company and employee needs.
Despite concerns that remote work might lead to decreased productivity due to lack of in-person supervision, the opposite often holds true. Remote workers are more prone to overthinking. On another front, the issue of air pollution in the national capital is set to turn critical due to stubble burning incidents in northwestern India. Despite efforts to curb these incidents, recent data indicates a troubling rise in their numbers this year. Tariq Ahmed's report probes the critical question: why are the measures to control stubble burning proving ineffective?
India's national capital remains one of the most polluted cities in the world. And it's that time of the year again when Delhi and NCR will brace for a higher buildup of pollution and smog thanks to stubble burning in neighbouring states. Paddy straw burning, prevalent in Punjab, Haryana, and regions of eastern Uttar Pradesh, typically occurs from mid-September to November end. Farmers must prepare fields for wheat sowing by late October, soon after the rice harvest in mid-September to early October. This short window leaves farmers with minimal time to clear off the straw. Burning becomes the fastest, cheapest method to clear fields. But despite several measures proposed by the governments to tackle the issue, incidents of stubble burning in Punjab, Haryana, Uttar Pradesh, Rajasthan, and Madhya Pradesh have only increased this year. The regions have witnessed 682 stubble burning incidents from September 15 to October 2nd this year, which is higher than the combined 633 incidents in 2021 and 2022 for the period, according to data from the Consortium for Research on Agro-Ecosystem Monitoring and Modelling from Space. In September this year, the central government allocated 600 crore rupees to states for managing paddy straws using on in situ and ex situ methods. For this, Punjab and Haryana have received 105 crores and 90 crore rupees respectively so far. The government has been pushing for a public-private partnership model of solution for ex situ management of stubble and has offered a 65% subsidy on the capital cost of machinery. The National Green Tribunal has also come up with a penalty structure ranging from 2,500 rupees to 15,000 rupees for stubble burning incidents above 10 acres. But the move has been politically fraught and hasn't been carried out on a wider scale yet. So is the ineffectiveness of machine-based in situ and ex situ stubble management systems a reason for the failure in controlling stubble burning?
For an individual farmer, even for a collective to some extent, the use of the machine is very, very limited. You just, for an entire 365 days, you're hardly using it for a 15-20 days. For rest of the year, it stands with it sits with the farmer or with the collective without any proper use. Now, for investing such a huge amount of money, say a crore or half a crore or whatever the price of the machine is, and using it just for a month, maximum for a month, that's a maximum thing, is not cost effective for a farmer. So this is one of the major problem in machines, and they are very costly. Then you need higher HP tractors to run these machines. They can't be run at with tractors which are below 45 HP. So obviously the machines need to be run on a higher powered tractors. You need to change your tractors as well.
In Punjab and Haryana, where most of the stubble burning is prevalent, the central government has turned down demand for cash incentives by farmers and state governments. This has led to the lower adoption of the machines. Haryana reportedly conducted campaigns against stubble burning and advocated use of machines to manage crop waste. However, the outcomes fell short of expectations.
So what the farmers are saying is, yes, they will be able to take care of the problem if you give them an additional incentive of roughly 2,000 rupees per acre. That is what the farmers are demanding. But the governments have been focusing more on selling machines as the answer. I don't know why we want to create another problem in Punjab. You know, with roughly 1.17 lakh machines sold till last year. And this year they want to add another 20,000, which means 1.37 lakh machines to control stubble burning in Punjab, and these machines will be operating only for about 3 weeks in a year. So why are we keen on converting Punjab into a junkyard for machines?
According to government data, there were more than 78,550 incidents of stubble burning reported in Punjab, Haryana, and the National Capital Region in 2021. While the scale of the stubble burning incidents showed a decline in 2022 compared to 2021, the increase in stubble burning this year can also be attributed to the early harvest of paddy.
Despite all the money spent, despite all the research done, the stubbling incidents or the burning incident still continues. Specifically for this year there is a problem of early harvesting because your crop is getting a good price in the market. Wheat is very much in demand in the market. Farmers quickly want to harvest paddy and start sowing wheat and put the paddy into market because paddy is giving you a great price nowadays.
Considering the vastness of land that cultivates paddy in northwestern India, experts suggest stubble management via in situ methods and cash incentives to farmers is the immediate solution for the burning issue. A long-term solution can be achieved with a combination of machines, biodecomposers, and a shift from paddy cultivation to other crops like maize, bajra, and jowar.
Let's now turn to the financial markets. The Reserve Bank of India's status quo on repo rate, along with a fall in crude oil prices, provided last-minute support to the markets last week. As the policy turned out to be a non-event, analysts see investor focus shifting to the September quarter earnings going ahead. In our next report, Nikita Vashisht and Rex Cano decode what the street is expecting from India Inc. in Q2 and what are the sectors to watch out for.
On 6th October, the Monetary Policy Committee of the Reserve Bank of India held the key repo rate unchanged at 6.5% for the fourth successive time, maintaining its stance as withdrawal of accommodation. While the policy outcome was on expected lines, the central bank surprised the market slightly as it hinted at possible open market operations to drain out excess liquidity if necessary. The announcement drove yields on the 10-year government bonds to a high of 7.36% in intraday deals before settling at 7.33%. According to Manish Jain of Ambit Asset Management, brief indication of OMO selling will have market participants shifting in their seats until certainty around liquidity, especially during the festive season, is attained. That said, since the RBI believes India to be the growth engine for the global economy, analysts expect the Q2 FY24 earnings season and growth during the festive season to drive the markets in the near term. Inward-looking sectors such as real estate, financials and hotels, they believe, would drive the earnings this quarter.
Surprises will be very rare. Financials, particularly banking, will do very well. Impressive credit growth and declining provisions will compensate for the diminishing margins in the sector, and the valuations are attractive in the segment. Automobiles will perform well, helped by the softening commodity prices. A surprise is likely from the IT segment. Results will be expectedly poor. The market knows that, but there is a possibility that the order bookings will be much better than expected.
Overall, Kotak Institutional Equities expects net profit of all the companies under its coverage to rise 38% year on year. In its recent note, the brokerage said net profit for Sensex companies may increase by 19% year on year in Q2 FY24, while it may grow by 23% year on year for Nifty 50 companies. Around 29 companies are scheduled to report their September quarter results this week, including IT majors, TCS, HCL Tech, and Infosys. That apart, global cues, crude oil prices, and inflation numbers would sway the market mood this week.
He's making plans for an early retirement. Business Standard.
Indian IT companies, meanwhile, are bracing for a weak Q2 earnings season, but investors can expect some positive surprises. Meanwhile, in the financial landscape, the practice of providing personal guarantees by company directors is a common strategy in business borrowing. Ayush Mishra delves into the intricacies of what personal guarantees entail.
A personal guarantee is a binding contract stating that the individual signing it is personally responsible for repaying the loan in case the debtor defaults. When an individual extends a personal guarantee on behalf of someone else, they are called a co-signer for a loan agreement. A guarantor can be an individual or an organization with proven creditworthiness. In India, the concept of guarantee is rooted in Section 126 of the Indian Contracts Act 1872. A contract of guarantee involves the debtor, creditor, and guarantor. Should the debtor fail to repay the creditor, the guarantor is obliged to settle the debt. If the guarantor defaults, the creditor has the right to initiate insolvency proceedings against them. The legal arrangement is a measure to ensure financial security and compelling responsible borrowing practices. In India, personal guarantees come in various forms. Individuals use loan guarantees for seeking bank loans, while businesses often require trade credit guarantees when extending credit to other businesses. Contractual guarantees, on the other hand, ensure the fulfillment of specific obligations in commercial contracts. Personal guarantees are generally enforceable in India, provided they comply with the relevant legal requirements and are not against public policy. Courts in India can enforce these guarantees if the debtor defaults. A fundamental aspect of personal guarantees is that the guarantor becomes personally liable for the debt case of a default. This means the guarantor's personal assets may be attached to settle the debt obligation. The Supreme Court of India has ruled that creditors can proceed against companies to recover debt if promoters have given personal guarantees to secure funds. The court has clarified that lenders can initiate proceedings against the promoters of a defaulting company even if the formal corporate insolvency resolution process of the company is not yet finalized. Depending on the type of guarantee and the financial institution involved, certain personal guarantees may need to be registered with regulatory authorities. For instance, the Reserve Bank of India or the Registrar of Companies may require registration of specific guarantees. Lenders review a guarantor's creditworthiness before considering loans or credit based on the guarantee. The assessment evaluates the financial stability of the guarantor and the ability to fulfill the commitment. Personal guarantees are crucial in India's financial and business landscape, which provide a mechanism to secure transactions and protect the interests of creditors. Understanding the legal framework, types, enforceability, and liability associated with personal guarantees is essential for anyone entering into such agreements.
By the nation's trusted bank, SBI, the banker to every Indian.
Well, that's all for today. For more news and analysis, please log on to business-standard.com. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.